Let's take another look at Hot Chili's exciting Costa Fuego copper gold project on the Chilean coast and see how it's progressed over the last year. Now, you may remember this project as a real standout in the copper development space and is one of S&P's top 10 undeveloped resources. This is major project optionality in a low altitude environment, and it's one of the very few plus 100 kiloton per annum projects outside the control of majors, with over 10 years of de-risking in an already inherently de-risked project. Since the Osisko Gold Royalties US $15 million investment agreement in mid 2023, the team at Hot Chili have further bolstered funding with a heavily oversubscribed capital raise. This was completed in May 2024 for 25 million Australian, followed by a share purchase plan of 5 million Australian that closed within 5 days, and an additional 6 million Australian raised in the 6 hours notice the company gave the market that the SPP was closing early. This points to a treasury of around 37 million Australian dollars, which will fund the project through the PFS and into feasibility. Now, considering Hot Chili's market cap is around 145 million Australian, this is a strong endorsement of the project and provides further look-through value. A very detailed PEA on the Costa Fuego project was released in June 2023 and has underpinned the recent project financing. It shows strong economics, especially from the perspective of the space they're in, which is that of a critical metal for world decarbonization. Let's take a look at some of the numbers and highlights coming out of the PEA, which will give us a good idea of the project's PFS potential, planned for release later this year. This project has a strong revenue profile over a 16-year mine life, 1.4 million tons copper with primary production averaging over 100 kilotons per annum copper equivalent. Low C1 cash costs at US $1.33 per pound copper net of byproduct credits, and post-tax NPV of US 1.1 billion, resulting in an IRR of 21%. Now that's using an 8% discount rate at a very reasonable $3.85 per pound copper price. This is also a highly leveraged copper price. So essentially for every 10 cents per pound above that 385, you'll see an additional 100 million US in post-tax NPV, and that's still at that 8% discount rate. Costa Fuego is also one of the world's lowest capital intensity major copper development projects. And with the completion of the PEA last year, significant funding secured, and a buoyed copper price environment, the company is full steam ahead on finalization of that pre-feasibility study. In addition, the company has been investigating the potential to build a water supply network for the Huasco Valley. Hot Chili had the foresight to secure substantial water rights early on in the project, which will develop Costa Fuego and could potentially be utilized for the entire Huasco region to unlock numerous major copper projects. The company is completing a business case study, which will explore commercial opportunities for the water license, potentially providing significant financing options for Costa Fuego as well. So let me fly you through the project itself so that you can grasp its synergy with all 4 resources located within 20 kilometers of each other, forming the Costa Fuego copper hub in the Huasco Valley. If we dive down into Cortadera, this is the project's porphyry crown jewel and a key factor in transforming Hot Chili's resource base since the company's first PFS on Productora in 2016. 65% of the production feed from across Costa Fuego is from open pits, and with a combination of flotation and leaching, the schedule has flexibility that lowers operational risk. The mineral resource estimate update in February 2024, which will be used to inform the PFS, saw a 13% increase in indicated resource tonnage at similar grade at Cortadera following development drilling in 2022 and 2023. Less than 20 kilometers from Cortadera is Productora. Initial mine phases here will target high-grade, near-surface material, and this forms the front end of the Costa Fuego mining schedule. The project is also low arsenic, with 85% of the total revenue from copper and US 1.9 billion revenue generated from byproducts of gold, molybdenum, and silver. The porphyry deposit Alice, which is located to the immediate west of Productora, was re-estimated in the February 2024 mineral resource estimate update, bringing it in line with the approach taken at Cortadera. San Antonio is a high-grade satellite deposit located approximately 10 kilometers east of Cortadera, and it completes the Costa Fuego hub. The resource was updated in February and now includes an indicated classified component following resource extension and metallurgical drilling. So as you can see, the Costa Fuego resource now stands at almost 800 million tons of indicated and over 200 million tons of inferred classified material, with the latest update providing high confidence in the delivery of the first mining reserve in the planned PFS later this year. That's over 3.6 million tons of indicated copper equivalent metal tonnage at a grade of 0.45% copper equivalent. Total revenue generated over life of mine is 13.5 billion US dollars, and over 98% of the production feed inventory is now indicated classified resources. The synergies between Cortadera and Productura have enabled development of an efficient schedule to target that high grade early on, which contributes to that 3.5-year payback, and it brings the block cave into production in year 8. Let's touch on the Costa Fuego site infrastructure now. This is a centralized, compact footprint. Heap leach, solvent extraction, and electrowinning plant facilities will sit at Productura, while waste rock will be disposed adjacent of the open pits or within mined-out areas. And the majority of tailings storage will be constrained by natural topography located to the north of Productura. San Antonio continues this design with waste rock dumps adjacent to the open pit. Now let's shift towards Costa Fuego's powerful infrastructure advantages as the gateway to the Huasco Valley. With 20% of new global copper supply in the coming 15 years to be sourced from this region, Hot Chili is located between the port and higher elevation copper projects and has the water license granted, which could make them viable. Speaking of the port, another major milestone for the company was completed in March 2024, with Hot Chili securing yet another infrastructure advantage for the project with a memorandum of understanding signed with Las Losas Port. Access to power has also been established, enabling the project to run on 100% renewables. The low energy intensive decision to use raw seawater for the project's processing means no requirement for desalination. So we're looking at low environmental impact and reduced energy. A project resilient to climate risk that is with an unlimited seawater source and no need for expensive high altitude pipelines or pumping stations. Essentially, this is half the cost of a high altitude freshwater scenario. So not only does this mean a very green footprint, but they have also skipped around 1 billion in capex on this project, which has really driven that low capital intensity. Hot Chili has long partnered with local communities, providing mental health support, funding for orphanages, fresh water for irrigation, and a commitment to using local goods and services. In terms of next steps, the company will still be focused on growth, with plans to complete drilling on 2 exploration targets within the Productura planned infrastructure footprint. Hot Chili can take advantage of 16 years of relationships in country, which gives the company first mover advantage on further growth opportunities in the region. A good example of this is the recent acquisition of the Domeco Mining Center. The land holding, which hosts several significant historical copper gold oxide mines, strengthens the company's pipeline of opportunities. Timeline-wise, Hot Chili delivered on the mineral resource estimate update and port services agreement in Q1 of this year and plans to complete the PFS at the end of 2024. This study should further demonstrate Costa Fuego's global relevance and potential to deliver near-term, meaningful new copper supply. The submission of the environmental impact assessment will follow the PFS, and this roadmap has the project at the financing stage in late 2026, early 2027. For a copper project that is low cost, this is low risk, it is long life, it is large scale, and is extremely leveraged to copper price appreciation and resource growth. So certainly exciting times at Hot Chili. Stay tuned to see how they continue to develop both the Costa Fuego Copper Gold project and its Huasco Valley water business. Reach out anytime to the Hot Chili team. They would love to connect.